Welcome to today's webinar. Does your procure-to-pay process measure up? This is Richard Waugh from Zaikas. We're pleased to sponsor today's webcast in association with ProcureCon and jointly presented with the Hackett Group. So today our intent is to provide you with a host of valuable tools and resources, benchmarks, best practices, and real-time polling questions to help you pinpoint where current performance is with regards to P2P and identify potential areas of improvement. Again, I'm from Zycus. I'd like to also introduce you to my co-presenter today, Amy Fong from the Hackett Group. She's program leader and senior procurement advisor for the Purchase-to-Pay program at Hackett Group. And Amy brings a wealth of experience to this role and has significant expertise in the domain acquired through 19 years of experience, both in industry and consulting, on procurement, supply chain, supplier performance and relationship management, amongst other disciplines. So we're really excited to have Amy today to take us through this discussion of how do you measure where you are on this continuum of hopefully continuous improvement in purchase-to-pay. Just a quick word about Zycus and where we fit in the marketplace. We're an end-to-end integrated source-to-pay suite of procurement and sourcing tools that focus both on the strategic aspects of procurement, things like spend analytics and strategic sourcing, contract and supplier management, or financial savings tracking and reporting, as well as more germane to today's topic, operational procurement. So the full purchase-to-pay cycle, starting with requisition and order management, catalog and content management, as well as invoice management and approval. The backdrop of where we fit, and again today we're kind of focusing on the blue in this particular diagram, the full purchase-to-pay cycle. And I'd like to turn it over to Amy to start our discussion about how the Hackett Group approaches this space and what kinds of real-time and meaningful benchmarks you can apply to your own program. Amy?
Richard, appreciate the introduction, and thank you for having me here today. Looking forward to speaking about this topic. For those of you familiar with the Hackett Group, performance measurement and transformation is really something that we've been doing for a long time. We've been doing benchmarking for about 20 years now, and I'm very close to the measurement and then the use of that measurement in supporting organizations to, as Richard said, continuously improve and transform. So this is just a quick slide explaining who Hackett is. You'll see this use of the view grid. We define and measure, define world-class, and we consider that to be a balance of efficiency and effectiveness. So you'll see that graphic here again. In terms of the various parts of the Hackett Group, just for those of you who are less familiar with us, we have three areas of the organization. We have benchmarking on the left, which is very deep measurement. We look across all of G&A and supply chain, measurement of cost structure, performance, stakeholder satisfaction, both like efficiency and effectiveness, as I said. On the right, we have transformational consulting. That's about changing your performance, changing your processes, implementation. We do that across across all of the various functions for many different industries, and that's the typical project-based work that you would think of if you know about, if you're familiar with regular consulting organizations. We do some great work in that area as well, and I came from that part of the business several years back before I moved over to Membership Advisory, which is the center here, and that's what I do now. We have an ongoing advisory program where we're really focused on best practice research, benchmark, use of the benchmark data to drive meaning and information and turning that into something that's usable in strategy and the day-to-day implementation of the organizations we work with. So we have many companies that subscribe to that on an ongoing basis. They may not be in the middle of a project, but they reach out to our advisors for support their continuous improvement type So that's really my background. That's where I come from, and working with Procure-to-Pay and procurement organizations and finance organizations on an ongoing basis, hundreds of them actually, seeing what's working and what's not working in the organizations. So there are three things I want to cover today. I want to talk first of all about what value is in P2P, because I think sometimes that gets lost, and I think we need to start with what is value before we start measuring performance. And then we're going to talk a little bit about we're going to talk about several best practice focus areas, and we will ask some questions. We have some polling questions planned, and we'll see how you're performing on those. And then at the end, I want to talk a little bit more about how to measure yourself. So Richard, we're going to go back and forth a bit on this, and you'll see as we do that, we should be pretty coordinated, I think, but you'll see we'll be sharing some examples from the Zycus perspective, as well as what Hackett defines really as the underlying best practices. Start by defining the purchase-to-pay process, because there's a lot of terminology out there. Not everybody thinks of it the same way. When Hackett talks about purchase-to-pay, we look at it as an end-to-end process, from requisition and PO processing all the way through reconciliation, accrual, and compliance, and the end of the AP process. The parts of A are what we consider purchasing operations, and those are traditionally reporting through procurement, although that has changed in many organizations. And that's processing, scheduling suppliers, processing the receipts, master content management, catalog management, and contract master management, and then also sometimes supplier master management. Tends on the AP side as well often. The accounts payable process is really the dark blue here. So everything from receiving and pre-processing an invoice, verifying it, processing it through, just resolving any discrepancies in your match process, paying the supplier, answering questions from your internal or external customers, storing and retrieving it, and then reconciling that with your financial processes. There's also P card management. That's a little bit different color. That sometimes is purchasing, and that's sometimes AP, but essentially the management of your P card program also falls into all of this. So it's really where we're going to be focused today. As Richard said, it's the left side of the Zycus suite of applications. So about what value is in purchase-to-pay. So value for us is looking at, for an organization, looking at what you aspire to be and what you intend to deliver to your stakeholders. And there's a lot of different types of value we can deliver from the purchase-to-pay process. And I'll say traditionally, I think most people looked at the P2P process and thought, how can I make this most efficient, right? How can I save operational costs? I want the lowest number of touches, and I want the fewest people working on things. And that's not necessarily a bad thing, because you do need to be efficient, but effectiveness has really been overlooked in the past. There's quite a bit of value you can drive by having an effective process as well as being efficient. And the way those value drivers come to play in P2P is some of the things in this slide. So for instance, driving greater adoption to preferred supplier contracts. We really have a lot of influence and control in the P2P process, and making sure that the contracts that our sourcing team works so hard to negotiate actually get followed through on. And what we find in the field is that about 10% for the average company, about 10% of negotiated savings are lost when the rubber hits the road, right? So, you work really hard to negotiate these contracts, and then only about 90% of the purchases are actually made off of them and capture those savings. And that's really a huge gap of value for the organization. Suppliers are also non-compliant and compliant in their process, and they make errors. Demand management is something that we can control. We can have some influence over where we steer people to how they buy and what they buy and which suppliers they use. Spendability, so having good information out of the P2P process is really critical to the strategic sourcing team being able to drive more value. You may notice in my bio I do have a procurement background. That feeds in well with the P2P process, because one of the biggest returns on investment in your organization is through strategic sourcing, and we've got quite a bit of data to back that up. But supporting the sourcing team is one of the key ways that the P2P process adds value. Capital objectives. So for some companies working, cash is a major indicator, and driving longer DPO is important. Others, maybe early payment discounts, the next one. For many companies, it's a combination of the two, using cash to drive to pay discounts when you have it and driving DPO longer when you need to. But having that, being able to pull those levers is a great source of value. Greater rebates from purchasing card usage, and also just general efficiency. I don't want to overlook and say that having efficient process isn't important, because it certainly is. But all of these things above, what we find is that these first several things besides efficiency tend to drive about 10 to 14 times in the analyses we've done, 10 to 14 times more value than just an efficient process alone. So it's important to understand your organization's broader goals and how your P2P process supports them. Next thing I like to look at Hackett is performance. And what performance really is the level of efficiency and effectiveness. It's essentially your scorecards, how you're going to measure yourself. So how well are we delivering? How are you compared to your peers? You may have a scorecard of specific metrics, on-time payments and first-pass match rates, and on the purchasing side, number of transactions on catalog and process metrics like that. Network spend would be another one. Supply-based consolidation is another one. There are quite a few ways that we can measure performance, and we'll talk about in the end some ways to actually measure that. Hackett uses the value grid that I mentioned earlier. These are the top efficiency and effectiveness drivers that we use to plot organizations on this value grid, and a combination of metrics behind this that drives, each of these dots as a company and drives the star that of your own company. The star on here, those that are in the top quartile for both efficiency and effectiveness are considered top performers. So if I show a metric in the next hour that talks about top performers versus non-top performers or peers, the top performers are those in this top blue box. The peers are everybody else in the green, and you'll see that there's quite a bit of difference, in the performance output of those groups. It's important to measure, and when we talk about measuring the purchase-to-pay process, we're typically really talking about these performance-type metrics, and that's not something I can give you a quick measurement on in a one-hour webcast. There's a lot more data and assessment that goes into that. We'll talk about that in the end, but what we are going to try to talk about today is capabilities, and we'll give some examples of capabilities. Capabilities are really the how you do things. It is the qualitative versus the quantitative performance. So it's the level of implementation of best practices, because we all know, our goal is an invoice automation, or our goal is, fast match, or it's a certain level of savings or whatever. But how do we actually get there? What are the changes we need to make? And we have a capability maturity model at Hackett that we use to measure this, and there's about 150 line items for purchase to pay alone that our members have access to be able to measure themselves. And so there's certainly an evolution there, and we get these 4 levels of evolution in maturity, starting with about the bottom quartile of organizations in our studies are at the lagging level, of that top 10th percentile of the leading level. Not everybody wants to be in that top 10th percentile, of course, but there certainly are some companies who decide that it's worth the investment, and they are there. And a lot of companies fall in these lower 3 levels. So some of the polling questions we'll have today actually tie back into our capability maturity model, and we'll use those. We'll go to you and give you a chance to assess yourself on those methods, because I think that's also a good indicator. What we find is that as your maturity and your capability increases, then over time your performance increases as well, and the quantitative metrics do show movement. These are very closely related together. Different yardsticks, but one drives the other. So talk now about some of the best practice areas that we want to talk about today. So there's 3 areas, really, three sections I'm going to go through. One is going to be about automating the process. This one's going to be about refining P2P channels. And then the third one about guiding requisitioners. And I think those are all important areas. I'm going to turn it over to Richard, or actually you've got the ball now, and let him ask this polling question. And then I'll begin and talk a little bit about the results.
Thanks, Ian. You've really set the stage for us with that value grid and where those value levers reside. And we did promise our audience the opportunity to kind of get a quick read on what their current capabilities are, without going through the exhaustive analysis that you mentioned of the full capability maturity model. But we wanted to give that quick read and feedback. And the starting point for us is sort of a very foundational aspect of Procure-to-Pay, which is the approval process, approval workflows. First polling question here gives you 4 different options, and I'll just try to sort of summarize those and say number 1 is basically a manual paper-based process. If you're still sort of mired in that manual paper-based area. Number 2 is some automation of the approval routing, but still manual maintenance of what those approval tables and the approval chain needs to be. Section 3 would be automation in the approval process and some independent tables to maintain on a more automated basis those approvals. But number 4 would be clearly the most involved, where it's full automation of approval workflow, and it's tied to an HR table, automatic updates of, the role-based approvals that are part of the delegation of authority that's embedded in the HR system. And those more advanced capabilities would also include things like out-of-office delegation, et cetera. So real quickly, we'll close the poll in a few seconds here, but it's 1 to 4, either manual, somewhat automated manual maintenance, automated with approval workflow with an independent approval table, or 4, full automation, full integration to the HR system as well. So we'll go ahead and close that poll and kind of take a quick look at where folks are across that spectrum. As we're waiting for the results, Amy, any prognostication where you see most organizations, typically starting?
I hate to guess, what they say about assuming, right? But I would say that I'm going to think that most people probably start at, the 1 or to the 2 level. I think most have moved beyond intracompany mail at this point, but we still have a lot that are at that level too. The results are up now.
So I think your prediction is accurate. As with most cases, it's sort of that bell curve, and most in the middle ground where there's some level of automation, but less than a quarter that would have that full workflow tied to the HR system, so there are automatic updates and the more sophisticated features like delegating approvals and those kinds of things. But probably not too surprising then.
This isn't surprising. I would say, if anything, I'm a little surprised 23% are at that top level, because I see that less commonly. The actual direct tie to, the HR flows, automatic updates, and this. I mentioned kind of that spread of our CMM, our maturity model, and we usually only see about 10%, but in that top level. This may be one that's shifting through time with more implementing this, and again, that bottom, that middle kind of 30 and 29%, those middle 2 levels. So if your maturity model, it matches those very closely. The level of adoption of an automated workflow for approval, the majority of companies really are at the exceeding level of, or somewhere between this achieving and exceeding level, where they have an automated requisition approval system. There's clearly defined, and hopefully it's tied to independent approval tables, but it's something that's manually maintained. We really like it when those approval tables are tied to an HR system, because it means that you've got less maintenance as people are moving out. One of the key differentiators that we didn't mention in the poll between 2 and 3, really, or achieving and exceeding, is tied into category requirements, which may vary across businesses and regions. And that is something also where, the variation by categories often makes sense. In a lot of cases, people do this just by cost or by spend level. And it's not necessarily a bad thing when they set delegation of authority, but there may be different needs for different categories, and then there's always some variation of whether it's in your budget or not, you know, within province and plan and not. So the policies, can get quite complicated, and when a system can adapt to that, as well as stay updated and, you know, have things like out-of-office rules and you know, actively managing delays in processing, that's a plus in our book. So I'm going to go fairly quickly through this, but I'll say that the first step really is in standardizing your approval policy. One of the gaps we see when we go into organizations in the transformation team side is that they don't even have a standardized approval policy. So it's really hard to do a lot of the other things that we are going to talk about if you don't have a policy to approve your requisitions up front. Typically, if a rec is approved up front with the right level of spend and it's in the budget and that's all taken care of, then downstream your match is much quicker. You don't need to go back and reapprove an invoice. You need to make sure that it matches what was originally approved, right? And then you approve to ensure that the payment is going to the right address and everything and that the numbers are right, but you're not reapproving a budget, you know, a spending decision. So getting this right up front really helps. There are some best practices in here in terms of, you know, automating the approval workflow, you know, hierarchy and authorization that limits the routing or that drives the routing to the appropriate personnel. Ideally, we want to minimize the number of people it's going through. You know, faster approval of requisitions results in higher stakeholder satisfaction and also less manual intervention from your buyers. So if it needs to go to a VP, it doesn't need to go to 3 levels below the VP first, right? Just fewer approvals at the appropriate level, push it down as low as you can from a responsibility level given your culture and your spend profile, and you know, make it as automated as possible. This should not be something that's a highly manual process taking up a lot and time. I know you have a great example here of what we mean by this.
Yeah, I'd just like to share kind of this best practices illustration as regards workflow. And, you know, one of the challenges, Amy, I think historically has been that to implement an automated workflow process has typically required, because the rules themselves can be pretty complex, you know, a lot of coding on the part of either the software provider or internal IT resources, and just called managing that and maintaining it as things change and roles change or people change in the organization. So a best practice here, we already mentioned the fact that it should be tied to the HR system and this delegation of authority, so that in a role-based model, as individuals change in the organization, the approval rules stay intact based on the role. But the consideration here is the ease of use for actually implementing and maintaining the workflow process itself. So in this case, what you see is actually an on-screen drag and drop way of visually and graphically depicting and laying out the workflow without having a IT resource needed to actually code the underlying rules. So you see a vision here of how you can name the different stakeholders in the process, drag and drop to implement those rules, apply various business conditions, so dollar approval thresholds and so on. And what you end up with is a diagram that can be created very quickly and easily of the you know, multi-level, multi-rule approval workflows. The other best practice that's here is the idea that through process for user satisfaction and adoption is giving them visibility to the approval process is and what the status is of their requisitions. So graphically shown here is the ability for the user to see what are the different hops that requisition has to go through in the approval chain and what is the current status. So at all times they're up to date. So that's just kind of a best practice from the workflow standpoint. I want to introduce our next poll question as we segue into you know, level of automation in the invoicing process. And here again you have 4 choices. The poll, the first of which is highly manual, essential paper-based invoice process. Number 2 maybe select high-volume suppliers with which you're doing EDI. So you're receiving EDI invoices, but only from a very small segment of the supply base. Or number three is kind of utilizes both EDI or XML, as well as portal-based or electronic web invoicing approach and OCR or intelligent data capture. Final one sort of marries all these things together, a blended invoice enablement strategy that uses a combination of EDI, XML, OCR, a supply portal, or a web invoicing solution as well. So we'll leave the poll open just for a few more seconds to quickly make some choices and kind of get that barometer on where folks are today. Is it on one end of the spectrum still highly paper-based or limited electronic invoicing with a few select suppliers, or on the other end of the spectrum sort of utilizing multiple strategies and approaches to capture and digitize a volume of invoices? So, Amy, it looks like we've got a pretty normal distribution. So we actually would have, a 60% that are paper-based or limited use of EDI, and 4% that are sort of pushing into incorporating other aspects like XML or portal or web-based invoice. Any surprises to you in that area?
Yeah, this one's an interesting one because I think I talk to very few companies that don't want to have all e-invoices, right? I mean, who wants to deal with paper? I don't think that many people really want to be an A anymore. But what I don't see is that many that are in the, at the 4 level, which is really what it takes most cases, some kind of blended invoice strategy that gets you to the point of having 100%. We have I'll show in a second, but there are very few companies that are at 100% electronic invoicing. It's challenging to get there. And if they are, it's probably for one region or one business unit. So that's something that I think the industry as a whole is kind of struggling with, the best way to get there. And these are kind of the steps that you go through along the way. A lot of organizations are starting with EDI as their historical invoicing platform, but that's just not feasible anymore to have all suppliers. That really targets a portion of suppliers. And then the third option here of really looking at one strategy of just EDI or just electronic or just imaging and data capture seems to be where a lot of people end up. But ultimately, we find that those who are really mature and successful need to do some kind of blending. The CM enabler that we use is here. We do expect most companies to be trying to get to a level 3 or 4 for this. This is where I'd say most organizations will want to push towards the high end of 3 or 4. What I find is that a lot may say, okay, we're trying really hard to get to 3, but we're not really there 100%, so we can't say that. It's a gradual push. This is a tough one. When we talk e-invoicing, I just want to kind of lay that out there. This is a good graphic, I think, to explain. Talking about invoice automation, there's the elimination of invoices through P cards or ERS, and then there's the advanced invoice processing, and some of that is through invoice capture. There's always some remaining that are going to be paper-based, and so OCR or intelligent data capture makes sense there. By the way, I'm not talking about, we scan it so we can store it. I'm talking about we scan it so somebody can key it in then. I've seen that off the PDF. But we scan it so that the data can be read and then processed electronically. That's really what we mean by capture. And then there's actual e-invoicing, and there's a variety of different ways to receive and process an electronic invoice. So what we're looking for, when we talk about e-invoicing, it's really the left-hand side of this, but all of these are different ways to automate your process. The numbers I mentioned are that, the top performers even in the industry still only have about 64% of their invoices automated, and we actually count those invoice elimination, so ERS type transactions as well. Only about 64% peers. The average company only about 25%. Now, I'll mention in a few minutes the study we're doing. We're doing a refresh of our Procure-to-Pay study this year, and I'm really hoping these numbers go up. But judging by, a lot of the numbers I see when we do a maturity model like this, I don't know enough companies have really moved the needle yet. This is one of them that's very challenging for a variety of reasons. And looking at, kind of the benefits from invoicing and versus the difficulty of enablement, we see this is just one simple metric. There are some others, but invoices per AP FTE, so the number of invoices that can be processed by AP FTEs. E-invoicing, significantly higher. Companies that are doing the majority of their invoices electronically versus those that are doing the majority paper, their transactions per FTE are much lower. And same as true with capture and imaging workflow. Workflow certainly does help. CR does help. Doesn't completely, it doesn't get you to where an actual processing of an electronic invoice does. Another thing that I think is worth noting is, and I don't know if it's going to work there. Here we do. It is working. That's new. Is that, looking at those various types of connectivity strategies, we see a real change in the industry over the last several years where direct actors, supplier portal solutions have been increasing, as have what we call third-party networks through the internet, or EIPP, which is more of a, many suppliers to many different buyers. The supplier portal solution is more a many-to-one buyer. And we see a dropping of that number of EDI, which is a more cost-intensive way to set up. That's probably really more appropriate for your large suppliers, but doesn't get all of the smaller suppliers captured. So a bit of a transition. What I'm curious to see is whether the email-based number that's pretty high there is going to go down. Again, this question is participants who use these, so you'll see it totals well above 100 because most people are using more than one solution, and a lot of people choose email as one of their methods, even if they're using the other options. So that's a number that I would want to see reached in the future. So let's talk about the next area, which is refining the purchase-to-pay channels. And I have this after, before we go to the question, I just want to mention that, the reason that we're going in this order is that, when we get to the P2P channels, when we look at those, it's really a matter of what are the options we have. So sometimes it's necessary to have automated already and have the automated options in place for our channels so that we're able then to make the choice of what the best channel is. And we'll talk more about what I mean by that in a second. Sure, you can go ahead.
Thanks. Yeah, and as regards transactional strategies, sometimes the verdict is that there are too many ways to buy and pay for goods. And here, again, just want to get a quick read on where folks are. So as regards your P2P transactional strategy, we say it's number one, which sort of looks like the wild west. There's no clearly defined approach or controls. There's any number of ways that someone may choose to make a purchase. Or is it number two, there's some base alignment, maybe some suggestion about for specific predefined spend categories, whether it's a P card based or a non-PO or a PO-backed transaction. Number three, have you started to move to where there are clearly preferred transactional channels, they P card, non-PO, assumed receipt, evaluated receipt settlement, three-way match, etc., tied to specific and aligned specifically to certain spend or commodity categories? Or is it number four, where there's probably the maximum control in that nearly all spend is covered by a contract or a PO, is controlled through an automated three matching process, pay match where appropriate, and that there are, as indicated here, thresholds for no and negative verification and approval that are optimized with the P card program fully implemented. So that's kind of having all of the goals input across multiple transactional strategies and channels. So I'm going to open for just a few more seconds and try to get an idea of where we are. And here, again, Amy, it looks like a pretty almost e-distribution across the 4 different categories. About a quarter of folks really without much control at all. About 29% have that basic alignment. Quarter sort of moving towards the preferred transactional channels, and just about 21% with the formalized end-to-end channel strategy and controls. What's your perspective on the results of the polling, Amy?
Yeah, again, doesn't surprise me. This is about the, when I show those kind of 4 levels and how they fall out, this is about what we expect to see. At 21%, I'm impressed that we do have that many that actually feel they've done this well, fully implemented, all of these various mechanisms. I think that's great. It's a hard process to get to this end state. And let me just talk a little bit. Well, let's look at the capability itself first. I think this pretty much matches what the polling question was, but the leading level of this really is that we've audited 3-way matching where we can. We've for the right commodities where we need control, highly controlled and risk commodities. We've got 2-way match, various forms of 2-way match where we think it's appropriate. We've got negative, and I didn't add this in the poll because it gets complicated, but we're using negative verification type thresholds for semi-automatic approval. And that means, the invoice gets paid unless you tell me not to, right? You get notification that it's a negative approval. We're not going to sit around and wait for weeks for somebody to positively approve something when it's, below a certain threshold. And we have a fully implemented P-card program. So, all of this together, and the level 3, really, this preferred channels are clearly communicated and compliance monitoring programs are in place. That kind of carries over. To get all of those things together accomplished does take some effort. And I mentioned, you really got to, find what your actual options are first. Then we talk so much about purchase-to-pay transactional strategy, and it comes up a lot, is because there are a lot of benefits. It helps you to align your strategic spend management with your transactional management. It really helps you to align the sourcing, the payment, the purchasing and the payment. Also helps to standardize things, and it's to get rid of overly complicated spend control requirements. So we tend, historically, finance has a tendency, and AP people tend to over-control in some cases. And then there's often other areas where we don't have enough control. We don't have POs or contracts in place to protect our IP or to protect against other risks. It's really about making calculated and educated decisions on where we do need to control and where we don't, and not wasting our time, but also controlling what we need to. So the right balance. The other, there's a couple other things here, but I would say, one of the other outcomes of this that's not listed is that we really need to define what this channel strategy is before we can tell our requisitioners what they should be doing and get them to the right place. So before we even talk about guided buying, which is the third area we're going to cover of the 3, we need to have this part figured out. And I'm going to talk just through very quickly. This can get really complicated. This can be a very long process if it were a project. But at the highest level, the process to do this really is to first look at all of your categories of spend and assess the risk level. So, this is kind of a compounding level of risk, right? And I actually should say high, not low. I apologize, there's a typo there. But, what's the risk for somebody buying this? Is it, unapproved spending? Is it abuse of funds? Is it loss of IP? Or, the highest risks would be spout or critical support. We don't have visibility into on-hand goods. We need it. And these, assumes that you have the risks below it. So you need to really think about the category. Where does it fall on here, right? And assess that. And then where it falls in terms of risk is going to determine how you're going to control. We call these control methods for transactional payment methods. I'll show that next. But essentially, how are we going to control this risk? So something that has really low risk may just have automated spend controls, pre-approved spending limits, right? If it's more higher risk, like a loss of IP, we probably need a contract, an IP terms in the contract, right? We need visibility, we need PO spend detail. If we need, unapproved suppliers, then we probably need a preferred supplier selection. And that's fairly automated, so there's limited suppliers that come up, and so on. So for each of these risks, there's some way we can control it. There's always a way to control some risk, although it comes with a cost, right? So that helps us establish what the right control methods are for that category. Next thing to talk about then is what we call transactional payment control channels. And this is where we come into what's the appropriate way to actually approve payment for this. So something in a low risk and low control, we may be able to put it on a P card or a commercial card. We may be able to set up a recurring payment for it. There's relatively no risk, and let's make it as easy as possible to approve that, right? These middle and medium low, medium high, they tend to lend themselves to two-way match, either assumed receipt or an ERS or maybe a non-PO invoice only type of payment. Sometimes, some categories where that invoice only is appropriate. Those in the higher risk, that's where we're going to look at three-way match. We're going to look at ERS, and we're going to put as much control as possible. We're going to make sure we have a contract in place, and then we measure a PO to a receipt to invoice in those cases. We're going to put a little more effort in there. This is, I talk about common transactional payment control channels. These are the 7 that we see most often. Without going through each of these, you see these go kind of from the lower end of the risk spectrum or lower control spectrum up to the higher end. And what we're looking for in companies that do this really well is that they've achieved the right balance between that control and that efficiency. There are 2 parts of this chart here. Let's look at the top first. When we look at a transactional basis, looking for how much spend you have on the gray optimal channels. So you want as much, or how many transactions, I should say, as many transactions as possible on the most efficient channels, and they're the ones in gray. And you see top performing organizations, they have about 37% on those gray channels, where non-top performing have only about 25%. Here. At the bottom, we're looking at the percent of spend that you have controlled. So you put spend on a PO or on a contract to be able to control your risk around it. And so what we're trying to get is efficiency with high transaction, but control with high spend. And top performers do this better as well. They use a 3-way match or a 2-way match or some kind of, a PO or a contract for 78% of their spend versus 68% with non-top performers. And this is, this does take a little bit of work to look at your transactions and how they break down, but it's not too hard to do this kind of analysis and figure out where you stand on this. Are we efficient and are we managing risk? 2 things that have to be constantly, balanced. Last thing that comes out of this, and this is a bit counterintuitive because everything we talked about is really regarding, how we pay for things, how we decide to approve payment for things. The last piece is how do we let people buy it? And that's directly in. So when we looked at, when we've established this transactional payment control, that really tells us what we need in terms of, how we can let people buy. So if we've got something that's on this lowest level of risk, they can use a P card. There's an automated payment schedule. If we've got something at the higher level, they need to do a requisition through the e-procurement. Maybe they need an MRP inventory request. Maybe, an e-procurement requisition or a manual request here. And this is what we can use. And obviously there's some automation in here. E-procurement requisition could mean a catalog buy as well, right? So there's some automation here where possible, but essentially we're going to use this to tell people what they can actually do. We've done this well and get through this kind of refined buy pay channel strategy. It's going to be something like this by category, and this is an example for staff aug. This is a pretty good process. They're sourcing it, and then they have people buy any catalog. That's typically some kind of under management system for talent. And then there's an automated buy. You don't actually have to touch the buy because that turns the requisition into a PO that automatically goes to the supplier. It's received with the time and attendance system, which means that contract worker, submits their time to show that it's received and approved. And then they don't even need an invoice. You just pay based on that through ACH. It's pretty streamlined process to get a contractor. Most companies really aren't that streamlined, or many are not for that category. But you would have, what you can see here is that there's different options for each. That's really where that automation comes in first, because you need to get to the point where you have these options on the top couple rows that are preferred, and then you have some down here that are not preferred. So what we want to tell people is that, the transactional channel for this category, the first choice is ERS. The next choice is e-invoice. We do not allow paper or no invoice. Those are not options. And you've got to be able to have made that decision before you can tell people what's preferred and unpreferred, right? And that's really where the P2P channel piece is out. I want to jump now to guiding requisitioners, and Richard, I'll let you take back control and this one.
Yeah, thanks, Amy. And I think we've talked about the more complex aspects of Procure-to-Pay, the channel strategies, and how this flows through and hits the accounting systems and the ledger and all those kinds of things. But now we're going to kind of step back from the user perspective, because when done properly, Procure-to-Pay masks all that complexity to the end user and really focuses on ease of use in their shopping experience. So our poll is very end user focused, and how easy is it for your users to find what they need in catalog. So the first choice with catalog search, it's essentially difficult. They have to know the right nomenclature to be able to find what they need. Or two, is the nomenclature fairly well understood, but the search process itself is serial. So a supplier would have to identify, for instance, the supply, who they're going to buy from before searching. Or number three, have you started to drive towards a higher level of ease of use in that there's cross-catalog search, so that a user could select from multiple potential sources of supply? Or number four, ultimate ease of use. The user doesn't need to have any specific domain knowledge. It's easy for them to search across multiple catalogs, and the system actually guides the buyers to the right items from the right supplier. So those are our four choices. Pretty straightforward. So again, we'll close here pretty quickly and take a quick look at how easy to use are your current Procure-to-Pay processes and systems from an end user catalog search and shopping standpoint. And usually the verdict is it could always be easier, because users are after that proverbial Amazon shopping, Google search experience we've come to accustomed to as consumers. So therefore, not surprisingly, the vast majority here, maybe about 75% or so, are still in number one or number two. It's hard to find, or else I have to kind of know exactly the right nomenclature or which supplier I want to buy from before I go to search. And I think the goal here is how do you make that user experience more intuitive, more satisfying, by giving them not only more choices with cross-catalog search, but making sure they make the right choices by guiding them to the right sources of supply and the right products.
Yeah, exactly. I mean, within an environment, in a corporate environment or organizational environment, where not a lot can be really mandated. There's not, it's not traditional. It's not really typical anymore to say you must go and buy from this supplier, and if you violate this policy, you're going to get a ding on your performance review. We only have so many sticks to use. It's got to be a carrot to get people the right thing, and we want them buying off of pricing we've negotiated from the right supplier, the right time. And so catalogs are one way that we can really make this easy. We say that it's easier the best solution is to make it easier for people to do the right thing than to do the wrong thing. And the companies that are really successful and lower that maverick spend number I mentioned really are good at this guided buying and catalog concept. I think, I'm not surprised by the results to see about 50% of you are at the number two level, where you have a decent, nomenclature. It's kind of logical, but you have to know who you're buying from before you do it, before you look for something. And that alone can be a little bit of a barrier and a little bit, frustrating, because I know that when I want something, go Google it and then I find, 10 different vendors and I compare them, right? And I think a lot of people, or they just go to Amazon and see all the different options on there, right? And if I had $1 for every time someone said we want our users to have an Amazon-like experience, I wouldn't be, doing this anymore, because that's kind of the end goal we all want, but we don't actually have it as much in the B2C space as we should, or the B2B space as we should. The B2C space is much more advanced in all of these, ease of implementation, or user ease of use technologies. So looking at this, we see there's 4 levels here, and these are pretty well reflected. Again, I think we've got about 20% of what I would consider very mature companies on the line that keep hitting these level 4s, and that's great to see. What this level of maturity here is a capability that makes sense, or a search capability that makes sense to people, that makes it easy to find things, that got direct functionality to guide buyers to the correct item, some kind of logic in there to get people to the right place, and is cross-searchable. So you don't need to know which store you're walking into when you decide what you're going to buy. And, a lot of people have that, but they don't necessarily have that direct buying piece that we'll talk in a little bit about as well. In terms of, really the value of catalogs and the automation, we see order automation really driving quite a value from the processing cost, as well as, from the effectiveness perspective. So order automation versus invoice processing costs. Interested that the two, the ordering side and the AP side actually tie together quite well here, because they seem, some people look at the independent processes, but we do see that the AP process cost per invoice it's lower for those with a higher level of order automation. In other words, 288 or G4 for those with about 90% of their orders automated. On the other hand, we see, indirect e-catalog spend versus just order processing costs. We see the more you have on catalogs, the lower your processing costs as well from a ordering perspective. We also see benefits in terms of spend visibility and negotiated cost reductions, or maverick spend, loss to non-compliance. So the higher order automation you have on this line, the better the visibility of your spend, and the higher your first pass match rate. So there's a lot of good things that are coming out of this, right? Without getting too deep into it in the interest of time, basically you're driving a lot of efficiency and effectiveness in the process. Those that have, high adopters of e-catalogs tend to have much lower maverick spend savings loss to non-compliance versus lower adopters of e-catalogs. In practice, these numbers tend to be even higher because people tend to estimate this number. Increased catalogs use really depends a lot on the interface. It needs to be very user-friendly. It can't take me 20 clicks to buy a hammer, it needs, or a paperclip, right? It needs to be 1 or 2 clicks to get to what I want. Self-guiding search, so being able to put in a search by an attribute or by text, and it guides me to the right place. Ways that features to save a shopping cart, like every time I buy office supplies, and an admin is going to buy this specific shopping cart, so let's just put that in here and make it easy to rebuy that. And then what we refer to as vendor agnostic, meaning that free text across multiple vendor catalogs. That's the easiest way to do it. That's the most, I'll call it Google-like in this case, instead of Amazon-like experience. Richard, I'll let you talk about this Zycus illustration.
Yeah, I think this just kind of picks up on the points you were just making, and in terms of how you drive adoption, you make it fast, you make it fun, you make it easy, and make it right. And our twist on the search piece is actually, you mentioned self-guided search. Ours is really more of a system-guided search, so it's using artificial intelligence actually to take a user's natural language search term and classify it. And the reason for that is we've experienced with keyword searches the fact that we may get back a lot more than we bargained for. Sometimes extraneous search results, just because the search term I used is somewhere embedded in the long description of that product, but it has nothing to do with what I'm looking for. So the idea here is make the experience more satisfying relevant to the user right from the outset because they're only going to get relevant search results. You automatically categorize what they need. And guided buying will help steer the user to only approved vendors or preferred vendors who perhaps they're diverse suppliers or green vendors, for example. And the other thing that's really critical here is the navigation aspect of making it easy goes well beyond catalog buying, because frankly the catalog experience is the easy part of Procure-to-Pay, but most organizations see the vast majority of indirect spend is not catalog based, it's services or non-standard products. The guided buying experience has to effectively walk the user through the navigation on how do I requisition something that's not in a catalog as well. And then at the end of the day, making it right. So that means at checkout, simplifying user experience, because if the system is automatically assigning the right category code and mapping from there to the right GL code, don't ask the user to have to put in all these long strings of information that they not know or have access to and end up getting a transaction that's miscoded or misclassified. Let the system do it. So that's really our approach there. I wanted to, just to close out, I'm going to skip through our final polling question, and Amy, turn it to you to kind of embellish on this guided buying.
Sure. Yeah, I was going to suggest that because I think you can all see, and I believe you'll all get the slides after this. I know people are looking at what we're getting at here. And the second one about guiding requisitioners is really very close to what we described with the catalog discussion. This is about, how easy is it for requisitioners to find approved sources of supply, and we refer to that as guided buying. So again, what we're looking at here is an intuitive consumer-like B2B experience, and Richard made some great points about, the catalog stuff is actually the easy stuff, right? There's some categories that are great for that, and others that don't really lend themselves to a very simple catalog. And so when we look at, how do we really guide requisitioners from, requisition to order creation, there are additional steps that need to happen here. And to blow this up a little bit more, we typically look at it between self-managed buying and procurement-assisted buying. And there are various ways we can support that. Procurement may assist in tactical or strategic. You may have a buyer, you may have a strategic sourcing person that they need to work with. You may have other buying channels that are self-managed, so a P card, a manual request, a shopping cart, or they need to pull it from supply like a stock room. And I'm not going to go through all these in a lot of detail, but I think you can see, these are pretty self-explanatory, that as we talk about those buying channels, you need to really figure out which of these buying channels, buying tools is right for which category. And there's, the self-managed buying channel, and then there's the P2P, the transactional control channel that is, that's how you're going to approve payment when we talked earlier about that. What we really see is that when we ask, how good are you at driving requisitioners to the preferred buy channels, we see top performers are better than this, but for the average company, only about half of them thought they were even, mostly effective with gaps. Most people are, have some gaps in here. Only 8% said they're really effective. There's still a lot of room to go on this, I believe. There's really 4 things that help you, to enable this, 4 areas that we focus on: enabling self-service buying, deploying easy-to-use tools, building a base of approved, trusted suppliers, because you got to have those trusted suppliers, even if it's, a tactical buyer-assisted buy, and then providing professional buyer help when needed, having a buying desk or having a buyer-assisted purchase for some things where it's just necessary. But you want to use those tools in the right place as well. Not everything should go through a buyer. Do you want to go through this? I know we just have a couple minutes left.
Yeah, well, the last illustration I'll share here really deals with how guided buying addresses that non-catalog based requisition. And here we've borrowed the metaphor of a GPS, the way it navigates us along the roadways. In this case, GPS being, really a guided procurement system. But the idea is, instead of, when I'm making a non-catalog requisition, instead of being faced with a blank canvas, a blank free-form requisition, with a category-specific guided form, a guide buying model will prompt me through the specifications that I need. For instance, if it's an equipment lease, what what's the purpose of it, what's the duration, the type of, et cetera. So just an illustration there of how guided buying can really work.
Richard, we're getting to kind of the last few slides here. I want to wrap up real quick. There's some additional, the last piece here is about, how do you measure yourself? How do you measure your P2P process? And I have a list here of some of the attributes that I think are important for P2P measurement. You're measuring the whole process end-to-end, not just purchasing, not just AP, but you're looking at the output of the end-to-end process. You're looking at the customer, the stakeholder, and what they need. Measurement really needs to drive action. This isn't measurement for the sake of measurement. The changes, the measure you use may change as your value proposition changes. There are a couple slides in here that go through the typical kinds of metrics that we see used to measure the P2P process. I'm not going to read through these, but what I am going to say is there's a bit of quantitative data to be able to do these, to be able to calculate a number of these metrics. And a lot of these I've hit on as we've talked today. One tool that we have that we're partnering with Zycus on is a purchase-to-pay study. And you saw me use the metrics from our past purchase-to-pay study. It's a study we launch every 2 years, and we use that data for about 2 years. We do a big analysis. We open it up broadly every 2 years, and then we do a big analysis, and we produce new metrics off of that. And there's a lot of great reasons listed here to participate in this. We are going to be launching it in April, the end of April, and we are partnering with Zycus to allow Zycus to also use this tool as a way to help their contacts measure their performance in purchase-to-pay. So it's great to understand these capabilities and how you do things, and it helps to build your roadmap. But it's also great to have a baseline to see, for instance, % of our invoices are automated, or what does our transactional strategy, what is it today? How controlled are we? How well are we managing our risk? And other things like what % are on catalogs, or how well are we really guiding our requisitioners. So I want everybody to stay tuned for that. There will be an invitation from Zycus with a participation link out, and this is an excellent tool. It's something that's really typically only available to our advisory members on an ongoing basis, but we've reached an agreement that Zycus will be able to use this as well. And I think it's an excellent way to get a very good snapshot, very detailed snapshot of your organization's performance that you can use with your executive team or with your process team to be able to drive change and drive investment on an ongoing basis. So with that, I'm going to wrap it up and turn it over to Richard. I know that we probably won't get to all questions, but I do want to say that I'm happy to answer questions afterwards, maybe through Richard and the Zycus team.
Thanks so much, Amy. We too are very excited about the purchase pay study. We're launching jointly, and invite everyone to come back and participate in that study and get deeper insights into where your current program status lies and where the opportunities for improvement are. And like Amy said, our intent was to share a lot of information. I think we certainly accomplished that goal today. And the amount of content didn't have time for Q&A, but both of us are open to following up on any questions. You have our contact information here. And please come back and join us and participate in the Purchase-to-Pay study. Thanks again for joining us today and participating, and thank you, Amy.
Thank you, Richard. Thanks for joining.